The income statement provides information about the profitability of a firm's business and how it relates to the value of the firm's shares. The income statement presents the firm's revenues and expenses over a period of time. Let's take an example. Here's the income statement for Company C on 31st December 2017. This is how it looks. The income statement lists different categories from gross profit to net income. Now let's learn them in detail. The first line is net sales, which are revenues from sales of products. The second line is cost of sales. These are costs directly related to producing the goods or services, such as manufacturing costs. The third line is gross profit. Gross profit is the difference between net sales and cost of sales. In order to calculate operating income, we need to learn operating expenses. These are expenses of running the business that are not directly related to producing the goods or services. They include administrative expenses, salaries, marketing costs, research and development expenses, and depreciation and amortization. We've got gross profit, we have operating expenses, and now we can calculate operating income. Operating income is Company C's gross profit net of operating expenses, adding other income. Now we include other sources of income in the operating income, and we get the firm's earnings before interest and taxes, or EBIT. From EBIT, we deduct the interest expenses to compute the company's pre-tax income, and then we deduct the company's taxes to determine the firm's net income. Net income represents the total earnings of the firm's equity holders. It's often reported on a per-share basis as the firm's earnings per share and diluted earnings per share. Earnings per share equals net income divided by shares outstanding. If Company C has 4 billion shares outstanding, EPS equals $1.97 per share. The number of shares outstanding in the firm may grow. For example, some firms compensate their employees with share options. The growth in the number of shares is referred to as dilution, as the same earnings will be divided by more shares. Diluted EPS equals net income divided by the sum of shares outstanding and number of growing shares outstanding. If the number of growing shares outstanding is 0.15 billion, diluted EPS equals $1.90 per share. This is how the income statement of Company C looks. We have listed different categories. We have gross profit, operating income, earnings before interest and taxes, or EBIT. We have pre-tax income, and we have net income. Thanks for watching. Enjoy your learning.